Screen share check and mic check, please. Awesome. Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for August 26, 2022. We got the explosive move today that we prepared for last night. We'll see how that shakes out. The least surprising move of all. So we're taking a look at market 150 right here. That's the 150-day look back. There's your 150-day high. There's your 150-day low. So we think of that on a scale of 0 to 100. And that puts right here at about 0.45 on that index scale. If that was a football field, maybe 50-yard line. We're noticing key support levels in here, and that got violated today to the downside. We noticed there was the one leg up and then back, then the test, and then the big downward move today. The long streak of the PSAR was broken. There's your PSAR flip right there. If this doesn't hold, there's that RL10 wiggle at 400 is a crucial support level, and then the next one is at about 380. So there's a couple legs down before we hit solid support right in here around 380. Yeah, predators gotta eat too. It's all part of the ecosystem. Predators gonna hunt. If we zoom in on the 30-day, we'll see how that shook out today. So there was no gap. You know, this was almost like a little bear trap right here. We had a 1, 2, and we were looking for breakouts above for a 1, 2, 3. But instead, what we got was opened right at the close and then reversed hard down through the 1-day low, the 2-day low, actually through the what had formerly been the 10-day low here, and then pushed to a new 10-day low. And now this 10-day low going, and now that's the 11 through 20, that low is lower than this low. So that whole teeter-totter has rolled over, and that's why we say, 400 is in play and 380 is in play. So that's danger. On the 30-minute, you can see how that move shook out. That was a momentary blip and then a rollover through the PSAR again, through the PSAR and the dragon, through the belly of the dragon and the RL10 at 412, 413. That was just as clear a signal down as you could get and closed extremely poorly into the close. So this whole piece here was absolute free fall. Once this price level at like 414, 413 if you want to give it some credit. That's why that was just plain free fall on a Friday. And then, unsurprisingly, everything correlated to the markets rolls over. Now, if we just take a look at the, this is that weekly market RLFF lens, where we're looking at the regression line fractal framework. And here's your RL10, here's your RL30. So the RL30 just rolled over, which is giving this last couple days an owl pattern to the short side. That's really problematic. There's your RLXD, there's your P1. If this breaks, again, that's around 400. Whew. Boy, is that going to be brutal. So this upward impulse above crossing the RL 270 that got through this little boundary has rolled over and broke. So that's why I would call this such a crucial support level. And then this is the last gasp down here. So that's the abyss. Now, if this were to recover from here and then break above the peak of the RL10, then everything would be happy, joy, joy. And then we'd be looking at this as the next support level. So that would be legitimately a COTA 2. So that's why this RL 90-270 intersection is so important. Is this going to act as support? Are we going to get some buying pressure coming in here that would make this a buy on dip recovery? That would make this a cup and handle. So this is really crucial this next week. Holy mackerel. Is that ever important? We went from, in the market classification, which is bull, sideways, and bear, volatile, normal, and sideways, we went from volatile, normal, and quiet. We went from bull quiet to bull normal. So this is an increase of volatility while we're in a bear. That's not good. That's an acceleration to the downside. So that will that'll get short-term traders' attention. It should. But ideal time for short-term traders to exploit the emotion with no overnight risk. Actually, the one thing we talked about for carrying overnight risk last night was treasuries, and you were glad if you did. You didn't need the gap, but you got a nice follow-through today. I will say that. 1, 2, 3, 1. Let's got to shrink that down just a little bit to see. There we go. 1, 2, 3, 4, 5, 6. Good. All right, so let's take a look at the index performance now. Had some real distinctions today. So here's the S&P just suffering through minus 3.4. The Russell was just as bad at 3.3. Diamonds not much better at 3.07. Tech got assassinated at minus 4.1. Emerging markets were much less impacted. On the other hand, the excess gains have all been in the U.S., and so the emerging markets did not have as far to fall, so they're only down 1.5. Treasuries were up 0.75. We made the argument yesterday why treasuries, which had come down to vicinity 110 from 120, and then made the turn right around 111 and had a nice day yesterday. And then the question was, should we keep some of that in case there's a gap up and go? Because the argument is there may be another swing move that's taking it back towards 120. And really, first you have to get through 115. There wasn't much gap on it. But that was the one we took a look at. And then the Treasury follow-through was there today while the equities were all getting cratered. And this thing rolled back up to close at 113.62 on its way to 115, hopefully on its way to 120 if you're a treasury holder. So that's sort of the flight to quality, and that was the argument that if you thought there was a swing trade going to continue, and if you didn't want to get left behind by the gap, you might play that one. So review last night's video on August 25th for that discussion in the last 15 minutes of the session. It was pretty good. Tesla off 2.7%. Let's take a look at the underperformers first. So again, there's the S&P at 0.38. You've got uranium, Wheaton Precious, clean energy, discretionary, FANGs, tech, biotech, Bitcoin, and blockchain all suffering. The individual companies that were bad, Robinhood 4.4, PayPal 4.2, Microsoft down another 3.8. That was a good trade to the south side, but you get the same effect if you just traded the Qs or XLK. There was nothing extra special about Microsoft. Apple, pretty much the same thing. Pretty much got what the tech sector got. Cliff was down 3.4, so that's one of our metals. Here's Alcoa and U.S. Steel. Resisted some of that sell-off better than the market, but still not very, very strong at all. To the upside, you have commercial real estate was only off 3%. Materials, finance, lumber, the other lumber, staples off 2.5%. Real estate 2.4%. Lithium, marijuana. Now, marijuana had been such a strong sector the last 3 days, but even that had some profit taking today. Why not? Everybody taking some risk off before the weekend. Mexico, blended large cap crypto off 2%. Energy 1.1%. Aussie dollar 1%. Oil exploration and oil 0.8%. Brazil off 0.62%. And then this is where the cut line for the gains versus the losses really was. You had blended commodities at 0.4%. Agriculture, the inflation trade up 1.25%. So it closed at 2076. That's a good thing. And then finally, the VIX starting to show some respect for portfolio insurance, up 2.28. So not a surprising array of performance here on the sectors. Energy and food continuing to be useful. And believe it or not, the internationals showing more resilience. And I think it's because they had less to lose. Less profit preservation there. There wasn't buying pressure, but they just didn't have as much to lose. Because this is the weekend report day, I'm going to go straight to the sniper trades and close out for the week, and then we'll go take a look at the traders' trades, and then we'll take a look at the weekend reports. Okay, so here's the Aussie dollar. I tried that one today with my simplified setup. The guys have been doing so good in that I wanted to see what all the enthusiasm was about. So I looked right in here at the support level. It's below the PSAR. The dragon is falling. The RL10 was falling. That seemed like, well, why not? And that's the standard risk box. And because I'm not usually trading this one, I didn't wait for a 1, 2, 3. I just wanted to get paid early. So that's like +1. That was a rollover and a rejection at the PSAR and started to fail again. So I put the same trade on, standard risk box. This one paid off big time. There was, in retrospect, that's that little RL10 wiggle where there's a momentary blip in price and then it resumes. So either one of those could have been, because they were below the RL10. That would have been a collapsing dragon second position. But actually I was content just to have one on and in the money, since I'm relatively new to this target. Trusting the PSAR and the RL10, so I just stayed with it until the PSAR flipped, because I just had the one position on. I especially want to respect the PSAR, and so that paid +2. So +1 and +2 were about +3 net so far. The short resumes with the PSAR flip once again, about a half, so we finished the day at about 3.5 in the Aussie. Now, I was pretty happy with that until I saw what the boys did. So now I can see that I got some more work to do, and we'll see that in a minute. This is the S&P itself. So if you get the market right, you're in good shape. So this was the close, and it rolled up and then immediately fell. And as soon as it kind of broke through here, I was alerted, and then by this point, it was failing, so I just put a standard risk box on it. It immediately reversed against me, so I took a -0.7. And then it rolled over once again. So when you get that rollover and it's below the PSAR and the PSAR keeps rolling, that's a collapsing dragon. So I just put the same trade on again. Everything else in the market was suffering. And then by this time, 3 bars in, if that's your risk, you should be down here and locking in. You should be locking in that gain, and maybe even here, depending on how much you want to preserve. There was a clear opportunity for a second position here. I was on some other faster movers, but I was happy to see that the market was voting down, which made the other shorts that I had better. So using this as not only a trade but also for information. Then this is gets me out here at the PSAR flip standard exit. So there's 1 unit of reward, 1 unit of risk, I should say. 1, 2, 3, 4. So that's +4 just in the S&P. And tech was worse. The collapsing dragon resumes. Standard risk. This one had some cushion because I had +4, so I was content with this. When this flipped again, I waited for it to get clearly below here, and that was so I just added the second position there. I'm not offended if you scratched here, as long as you re-enter there. And that's just grinding and no joy anywhere. That's everybody trying to just get out of a position without panicking, and not a single buyer in sight anywhere. None. So that's 1 unit of risk. That's 1, 2 for this guy. So this is +4. This one is +2. And then this one is another +1. So that's about +7 in the ES contract, or SPY if you're trading the ETF. Get the market right, and 50% of the stuff is done. This is the ETF ETHE. I was trading Ethereum, but I wanted to show just the price tracking on ETHE. You can't short that one, but it tracks the Ethereum perfectly. That's a collapsing dragon all day. Had two chances to go. It didn't. It broke through. And now it's a risk box below the support. So I'm just short. Second position. Third position on a collapsing dragon. Missed the fourth one. And just made bank on that one. Just thankful to get out of it. So there's 1 unit of risk. So that's 1, 2, 3, 4, 5. So that's plus 5 on the first position. 1, 2, 3. Plus 3 on the second position. Plus 1 on the third position. So that's 9 on that leg. Trust the PSAR. PSAR flips again. Pick up another 1. And leave it alone. So that's about plus 9. Plus 10 on Ethereum. So that was me today. Let's take a look at the boys. They done real good. Here's Eugene flying with the Hawks today. Here's the Fed speaking. So he's working ArcGenomics. So that one is strongly correlated to XBI. Only XBI is pretty volatile, but ArcGenomics is about XBI times 1.5. So it's liquid and volatile. So he gets the collapsing dragon, gets paid, re-enters. Fed speaks. When the smoke clears, he plays the collapsing dragon, gets paid large and large, 4 1/4. That's how you do it. The XBI was worse than the ES today, so the sector was getting punished. Here he is on Squarespace. So this is in that financial disruptors. And so leading up to the Fed, he gets that collapsing dragon and a second shot. He's not waiting around. You know, he's getting paid, and on the reversal after a Z3 excursion, he's just getting paid. Fed speaks, collapsing dragon, covered, collapsing dragon, 6 1/4, so that's about 10.5. Let's see, who was this? I'm trying to remember who did this one. Shahab, welcome back. He's been out of town for a while. Super trader. He sees this climbing Kata 2, so he gives that a try. Fractional loss. When the VWAP and the Bollinger Band mean fails, he gets this one. It rejects the RL270, and he's got these lower highs. That makes this a very nice collapsing dragon. Crushes that. Now, after this move down and a little shelf and it breaks, that's an opportunity for a second entry. Notice the leg down holds a shelf and breaks. That's an opportunity. Sells off, makes this little shelf, breaks again. That's an opportunity. So that 2.33 could have been 4. He plays the SSC. Wasn't much there, and still gets back into this one. Now this is one where I think we got to make. It had 5 bars where it did not make a new low. I think we got to maybe get a little piece out of that one, and not much there too. But 2.5 for the day. Very nicely done, Cisco. Here's Tim. Doing my heart good to see him settling in and getting it done. PSAR flip, crushes it, trusts the PSAR, re-enters, trusts the PSAR. So there's 1, there's 1.5. Tries the short, not much there, stop and reverse, trusts the PSAR, trusts the PSAR, trusts the PSAR, trusts the PSAR. 6.8. Today's goal, skipping the second money management stop, trusting the PSAR after the first no lose plus dinner for 2. That's the science project. Tightening trailing stops at critical states. So as they're coming into the station, he's making sure that he doesn't give back after a reversal. His simple exit rules, dude, just so proud of you. Keep up the great work. Luke, I thought I was doing okay with 3.5 on the Aussie, and then the master comes in. Here's his sideways quiet channel. Here's the collapsing dragon. Second entry collapsing dragon. 6.7. SSC PSAR flip gets paid. Now this is a COTA 2 entry because you have these lower highs and then it rolls over. So as soon as you get the RLXD, you can get that one short. And then there was a potential second entry there, but why not just take what you got? 8.9. Back in the saddle. Just nice work all around, everybody. Every single one of you did so good today. On a day where there was pain and suffering, when the market went from bear quiet to bear normal, you crushed it with standard practice. That was courageous and impressive. All right, let's take a look at the weekend reports. All right, so let's see where we are. Dashboard number 1. Well, coaching is easy. You guys got to make the plays on the field. That's where it gets done. So market went from bear quiet to bear normal. Game on, punishment short term, and then everything went below the 50-yard line into the weakness neutral minus. The risk Z went over to risk off today. That's important. Look how quickly that worm turns. And now we're concerned about this move. That kind of move, if we see that much, this could get to 380. This would get us to 400 in terms of expected volatility. ETF2 exposure remains at 50%. We've seen the 4. Yes. The Alex says, is it inverse ETFs? No, there's The more liquid ones, you can use them like TQQ and SQQQ for the leveraged inverse ETFs, FAS and FAZ for leveraged finance. Yeah, you want to stick to the very liquid ones so that you don't get the time lag. But yeah, that's a good question. And I only recommend those for intraday. I don't like holding them short. In the ETF portfolios, wait a minute, did I miss something in here? Yeah. All right, the ETF portfolios. The U.S. is still stronger than the globals, so no surprises there. But even the defensive plays gave back some today. Energy was one of the few bright spots this week. Emerging markets actually were a little more immune than the U.S., but they're further back, so they didn't have as much to lose. So we will see if this is going to be seen as a buy-on-dip opportunity in tech, or if this is a return to despair. The one that is surprising to me is real estate. You would think that would be a better store of value or a defensive play. I'm a little surprised by that still. Treasuries now have some ground to make up, and this was the start of it today. There's still a 5% move to the upside to get it to 120. ETF 32. You see the strength and energy now reflected in oil exploration as well as in energy. That's where your strength is. The DB Commodity Tracking Fund, DBC. Again, that's a mix of 4 commodities. There's energy, ag, base metals, and then precious metals. So those 4 together give you that blended commodity of DBC. China, that was a defensive play today. There's agriculture and emerging markets in the form of Brazil, and Latin America had some strength. Oops, sorry about that. Accidentally hit the mouse. Fit page. Let's go right to the weekend. Well, let's look at the market health check here. So the U.S. is still all above average. Asia remains a little bit weak. Europe much weaker. And commodities and oil and real estate to a lesser extent looking better in the asset classes. Again, all U.S. is above average. The global still were lagging, and that's why they didn't have as much give back this week, because they hadn't gained as much. In the ETF2 database, the strength remains kind of biotech and energy. The Russell had started to show some strength, but that got punished today. Discretionary got punished today, even though it's early in its growth phase. Energy is the place. In terms of the the weekly tradables, so we're looking at here is ETF liquidity, the top 30 ETFs by average daily dollar volume over the last 30 days, and we're looking at the ATR percentage. So those that are in green are both very liquid because they're on this list in terms of how much dollar volume they trade, but they're also liquid enough to be able to trade shorter term. So energy has a daily percentage move of 2.6. Biotech 3.87. That one's awesome. That's why the ARC-G trade from Eugene was so good, because that's leveraging the liquidity and volatility of biotechs with the extra advantage of the volatility of ARC. Then oil exploration and semiconductors, gold miners. What's interesting is that the gold miners are at 3.16, but gold itself is not really tradable. GLD, that is the least volatile of any of the ETFs. You can't really trade that one well intraday. But the gold miners themselves are 4 times as volatile. Just interesting note in passing. Okay, we're going to shift to the daily. We've already seen the trade of the day, and just go right to dashboard number 1. We've seen the bearish normal, the weakness, the risk off, the hint of a collapse there in volatility. The min pains, Chevron, ExxonMobil, Coca-Cola, that's your staples and energy right there. 3M, Home Depot, Disney, and Microsoft for the max pains. Microsoft's especially bad today. Tactical summary in the Dow. Just notice how many things broke down. So these were where you get these extended collapses. That means they were breaking down, to new 6-month lows out in here. And that's Walgreens and Intel just getting torched. Intel off 4% today. And Johnson & Johnson suffering too with a long-term losing streak. 15DD today in Procter. What's interesting is to note that there are actually a few channeling signals here in the Dow, and for it to be channeling, they have to be above their 200-day moving average. So the S&P is not. We're 15% below the 200. But these are actually above their 200-day moving average. So Apple, relatively healthy. Coke and McDonald's, you should note that. There are pockets of outperformance here. Merck and United Health. So of all the things that are getting murdered, the ones that are still above their 200-day moving average, you should take note of those and consider them to be relative strength leaders in these times of crisis. So Apple, let's remember those names. Apple, we looked at that one yesterday. Coke and McDonald's, Merck, and United Health. So put those on your list of potential leaders. Once this little panic subsides, you would be least surprised to see these ones that are already above their 200 looking pretty good. So keep that in mind. This is a case where you can use the signals for a particular system actually provide you information, even if you're not taking those signals. So channeling system, bullish only. It pulls back to oversold conditions, but is still above the 200. So a thing that's long-term strong pulls back a measured distance, so that on the 10-day look back, it's in the bottom oversold condition. So that's the one that you would be not surprised to see buy on dip and resume, because they're still greater than their 200-day moving average. These become targets of interest. Whereas these other things are getting slaughtered, these are not. In the ETFs, Also, same logic. Interesting to note that utilities, even though they had a 10-day breakdown today, it wasn't much, and that's the only one out of the entire ETF stack that meets the channeling criteria. So for a defensive play, that's not bad. Lots of pain and suffering in here. Treasuries and oil, Brazil and gold, Latin America, oil exploration. That's the one to exploit strength and energy short term. It's liquid and volatile. It's like a leveraged USO, if we can say it that way. The auto framer shows lots of symbols that have broken down more than 2 to 1 on a recovery to their 10-day high. I just start with the, from the top down, and I look at, I think Microsoft, Diamonds, Walmart, SPY, and Tech. Those are things that I want to keep on my short list for ready to recover once we get through the pain and suffering. And then the framing data, these are all the mechanical entries, the initial stops, the 10-day high target, which is what gives you the reward to risk ratio. And this highlights everything better than 2 to 1 out of that stack of about 80 tactical symbols that we use. Daily squeezes, only 3M is better than 2 to 1. So that tells you how directional the moves were today. Microsoft was slow and steady sell-off. Intel kind of squeezed but suffered today. I just, you heard me talk last night about the anomaly that is Intel. Now, interestingly, they are buying back company shares like they're going out of style as a signal that they're going to be okay. But it's what's interesting is how do companies in that condition use their money? So they've got some free capital, and instead of investing in manufacturing plants in the United States in order to get back into the fabrication business, they're just buying stock back to improve their posture in the financial markets. You would think that if they were trying to rebuild jobs and manufacturing base here, that they'd be spending money on that, unless they're thinking that they can get government money to support the fabricating plants and then use their own capital to improve their stock price position. That's some shrewd financial engineering right there. That's some of the shenanigans you get when you got public-private financing. All right, Godzilla setups. We're starting to see a bunch more of these now shaping up. And we got a bunch of large one-day moves, and HBI, which was on the list yesterday, had a huge adverse move today. And now we're starting to see quite a few Godzillas waking up. Verizon's in there. Garmin, Kansas City company. Newmont Mining back on the list. Intel, boy, that's the one to watch. That's the one to play. Intel. That's going to be a focus stock next week. And then inside our tactical symbol set, Bitcoin and Wheaton Precious Metals. Got the oversold conditions here for Godzilla, plus the volatility has crept in. There he is, the bad boy himself, waking up. In the let's see, in the fireworks, so only a few that are still in that bought condition, and there wasn't much volatility on those, NLSN and CF. The fence sitters, these are the ones, again, that are, if we set up the 100 versus the 0, these are the ones that are tightly clustered near the 0.5 range. And so if they break out of that critical state and you have a small risk box on it, you can get a 3-to-1 move to the top of the stack or the bottom of the stack, and you started to see a bunch of those starting to break out. This makes a great straddle. This is a great straddle pattern, especially if you see when you see things that are still tightly compressed and haven't started their move yet. So these were all on the list yesterday, and then if you were playing the straddle, your option plays are already well in the money. Among the most quiets, this one, LRCX, stands out as a big one-day move, while the 5-day move is still small. This is the beginning. These are the ones that are beginning to break out of their quietude. So I would pay attention for your favorite symbols in that stack. And then the ones that are most volatile on the 5-day and also raging on the 1-day should get your special attention as well. This is the AutoFramer stats for our standard tactical set. I'm still sorting this by daily percent loss to find the follow-throughs at the extremes. These are the tactical. This is the tactical symbol set over here, sorted by the 5-day for all your sniper stats. Ethereum woke up and was enraged to the downside today. Even consumer staples, big move to the downside. Emerging markets. So you're starting to see how all of that volatility to the downside, it's voting down. The multi-time frame NDX tells the story, all that bright red pain and suffering. Some things that really stick out. I mean, Intel and Walgreen can they even survive? Johnson & Johnson, such a great company, but they are just getting murdered. Treasury starting to wake up after a long period of underperformance. Energy, oil and gas exploration looking strong. Devon Energy in the energy space. ExxonMobil. Chevron. Finding relative strength like that quickly clues you in onto what's working and what's not. This is that's a decisive vote downward right there. Next support level, 400. That's crucial. The slope has rolled over, has left its 10-day moving average behind. It's coming back towards the long-term normal. Yeah, this would get you back to about 400 if it comes back to here. All right, I think that's. If you go back a couple days and listen to my discussion of why we were concerned when the RL30 had peaked up here around Z3, and we said that would be the least surprising move, and the RL10 slope had only been about there, and another big day of sell-off, while the RL90 is still in younger days. Now we're coming to that crucial intersection here towards the bottom of the river. This one right here it just gives me three perspectives informed by statistics on three different time frames of the size of the energy moves, and when that 30 gets to those peak turning points, sharp swing trade reversals in the other direction are not surprising. Honest to God, this is my This is my swing timing model right here. How to find those interesting turning points. Like when this one turned, that was here. Look at that move. And when it bottomed out, and this one, that peak, it has just started a potential sell-off. So there's a lot more pain and suffering that could be there. It's not predicting, it's simply describing, but it certainly helps me find those turning points at crucial levels. All right, that's everything we got for today. Tomorrow, we've got swing trading work at 8. I'm going to try to go early on that. We have a late soccer match tomorrow, so we'll get the if Ken H can get those charts up early, I'll try to get it recorded before the match. And then the creativity guys are knocking it out of the park. This week's lesson, interestingly, is on courage. So we'll see what the boys have to say on that one. Keep up the great work. Really impressed with the traders today. You guys really exploited the opportunity, and we're flat going into the weekend, so just really proud of your work. Keep up the fire, and we shall see you tomorrow or Sunday. Take good care.